This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning with the S&P and the Dow now at new contract highs. Also, over the last 4 days, we had the largest increase in stock index futures in 3 years over a 4-day period. Today's strength primarily due to the gross domestic product report for the third quarter coming in up 5%, beating the estimates of up 4.3%. Some of the other reports were offsetting, such as durable goods coming in down 0.7%. Also, we had new home sales showing a weaker than anticipated number. But of all these economic reports, it's the gross domestic product report that dominated, and that is the report that propelled stock index futures to these new highs. Over the last few days of trading this year, we would anticipate further gains. It also looks like we will see additional strength well into next year for all of the indices. So nothing changing in our long-term view for stock index futures. This bull market is likely to continue well into next year. Over in the currencies, seeing the dollar index advancing to a new 5-year high. This, of course, primarily due to the GDP report coming in as strong as it did. Also, we are seeing some pressure in the British pound after the UK current account deficit widening, arguing for the Bank of England to keep interest rates at a record low for a longer period of time. Weakness in the Japanese yen. Feeling is that the Bank of Japan will be forced to add more stimulus to their banking system next year, and that is bearish the yen from an interest rate differential point of view. So look for lower in the yen through this year and well into next year. Also, we have a similar story as far as the Australian dollar is concerned. The Reserve Bank of Australia is likely to lower interest rates next year, that being a bearish factor for the Australian dollar. So to summarize, look for higher prices in the dollar index, lower prices in the yen, lower prices in the Australian dollar for the rest of this year and into next year. Over in the interest rate markets, futures lower, primarily due to the GDP report. Also, we do have some supply this week, some Treasury auctions today and tomorrow. This one I'd leave alone for the balance of this year, but I'm looking for some areas to get long sometime early next year. Still feeling that the main trend is higher for the 30-year bonds. So maybe a little more congestion, possibly some long liquidation, but the main trend is still higher at the long end of the curve, and I think this is a trend that will continue well into next year, probably through the first half of 2015. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.